Hey. What's up, guys? Five. I guess we're good to go, man. There it goes. All right, wait for the first roller to go. Likes to freeze up on me. I don't know what day it is. Wednesday? Tuesday? Good God, man. Wednesday. Dude, happy Wednesday. Hump day. Whatever day you want it to be, it can be, alright? It can be anything you want in this life. Not be what you want to be, right? Why not be a little bit weird? But yeah, man, welcome to Obe TA. It is Wednesday, November 10th, 21. Stuff going on today. I actually had full analysis going on all day long, and everything was looking good. We're completing the 3-step process with the breakout on the daily for Bitcoin and everything. Around like 4 o'clock, 5 o'clock, everything just started selling off, started pulling. So we're just gonna kind of wing it tonight. We'll do it live, dude, right? Toasty! F it, we'll do it live. That's what we're gonna do here, man, because this stuff it happens, it's normal, especially after things have been going on such a crazy as they have. Pullbacks and sell-offs are totally normal, and at this point we just look to see where potential areas of support will be, right? Or where we could maybe find an edge, right? So let's take a look here at Bitcoin right on this. Right. Coming in here, go ahead, hit the like button, subscribe, all that kind of stuff, but Let's see what Bitcoin's currently doing. It actually just closed out its daily candle. Let's go close out the daily candle. Big red guy, not great. But what I will say about it, we go ahead and look at the low, where it closed. Right, it closed at 64,912. All right, so it's really trying to hold this this back here from April 14th. All right, now that closed. Well, that was as high as 4899, right? So technically, it held that line. Really, it's just battling 65,000. New candle is already starting to kind of starting to open below. Just hanging out though. So what this tells you really is there's just a battle going on. Not that. I'm just really trying to hold this level. We'll see if it can. What we're seeing here on the daily, you're seeing Class A bearish divergence. All right, forming all oscillators here. The MACD, our side, we've got a higher high in price. Seemingly, it's a little bit early, but a higher high in price, lower highs on the oscillator, right? Which weakness signal. Selling off is firm. Class A divergence. So, you know, you're hanging on to 65,000. If you fall below 65,000, let's take a look. At first glance, you might say, all right, you'll probably head right back down to 60. But what you want to always do here, try to look for areas of influence, right? I'm going to take the local low here, back from October 28th, the high, the most high we had, November 10th, and what are we above right now? Where are we going down? Well, if we fall below 65 over here, back from April 14th, right? The next week for this to be going to be right over here, March 13th. All right, now that's just kind of the middle of this consolidation. This chop zone doesn't really mean much, except you notice here that the Fibonacci from this low, this local low to the high, 618 line. Right? 618 lines up perfectly with this peak back here from March 13th. So otherwise, I would probably say it's not that shit, because it would just be by itself. There's nothing else really correlating it, but the fact that you have all of this consolidation going on here now, as well as at the 618 at a area of support, you could see it get support. Definitely possible. All right, and if it goes below that, then you'll try to true areas back here from May 9th, back here from February 22nd. All right, those active. You have a lot of support below you, so don't panic. It would need really to fall below. If it falls below 60, I'm getting a little bit worried. But as long as you stay above, 58 here, it's okay. Right, it'll be okay. Fall below 58, then kind of free. But we don't want to count chickens before they hatch yet. Nice. So yeah, the 618 at a level of historical resistance, major peak, major inflection points with the chop zone. Could see that act as or if fall below 65,000, which currently right now it seems like you're all right. 4 hour that just closed new well. Negative momentum is building. Locally, could see some support 64.386. Let's move to the hourly. Just get a little bit more juice. Again, bullish divergence is kind of wiped out. You've fallen below. I was in here 66. Approaching oversold levels on the hourly. Really mean too much. You're above the 200-day moving average still on the 4 hour. And this is just a pullback, a sell-off that's happening. Keep in mind the Class A bearish divergence, okay? But look, add and rise 21 days, 65, a little bit higher. It was up as high as 68% in the last 42 days. So you can't just continue to go up every single day and then not expect some kind of pull. Ever really. Keep an eye on it, right? This is the first instance you're seeing on this run of some Class A bearish divergence. So, okay, a lot of support looking left, See what happens when it starts getting down these levels. We're seeing no any signs of we're at 65, 1. Doesn't really look like it. Probably heading down. Alright. We'll see. We'll keep monitoring it. Cool. Alright, so that's Bitcoin, right? A little bit of a pullback, nothing shocking. Alright, it was only closed down 3%. Don't get your panties in the wad just yet. You've been in this market, you've seen much worse. Nothing too technically damaging. Just timeline. Right? I definitely 61, 9, 60,000. Let's go ahead and move it over to living dominant here. Alright, still the hidden bullish divergence argument still in effect. Yes, 200-day moving average on most recent book close here. So tested it, seemingly rejected off of it, so perhaps reading this. See how this plays out with the hidden bullish divergence still seemingly playing, almost going into the green. But unless you fall below this trend line that we have drawn here, it's okay. Right? Towards Bitcoin dominance, at Bitcoin is poised to have more money coming.
Right.
Yeah. Then monitor 4 hours telling us. No, not really. Maybe a little bit of cliff. Bearish. Not even. It's okay. Maybe a little hidden bearish divergence, almost right, same high in price, much higher high in momentum. It's not, you don't love to see that, but again, monitor it. Nothing super technically damaging. Trend lines. Alright. Take a look. Total market cap down 3%. Pretty much exactly the same. Nothing crazy. Expect to see support obviously back here. Wealth around $2.5. Really $2.73. That's where I would expect to see it's back down there. Right? 4 hour, not showing much really. I mean, if you can start to pivot above this little local low here, it could be showing urgent. Right? Situation to the flip side. But see right now the negative momentum. What's going on, guys? Who is in here? Say hello. I see a couple people going. There's 2 for me. I don't know if that's right or not, but alright, dude. How are we feeling about this freaking pullback? Most people don't like seeing pullbacks. I don't mind, as long as it's not technically damaging. Because all it means is that it's giving you an opportunity to start that zone. Hopefully, if you have some dry powder lying around, that's where you not great or nice or fun. Buy into an asset. Been going up 42 days. Not literally in a row, but you know what I mean. Very steadily up. So pullbacks, these sell-offs are totally natural. Profits, understandable. That's when you can start to strategize area. Fibonacci levels, or it's cheaper. Right? I don't think that crypto is dying off. It's gonna stick around. Could be going to areas that make more sense to buy it. Diana. Nothing crazy. Go back here before. Back to this. Right. Seen it. I've been there. Okay. That is the total market. going on, guys? How's your Wednesday going?
Are you guys having a killer time?
So yeah, man. Let's take a look at Ethereum now. So, what's going on with Ethereum? 0.19%. Grow your levels of support. Okay. I always like to size up my my levels of support. Thermal swings, the daily. Actually, want to move it over to the 4 days and your confirmation candle out overbought, positive momentum is above this prior high back here. So what's good about that is that eliminates, at least on the weekly, the argument for Class A bearish. So as far as a longer time scale, situation further on for weeks could be live here. It's at least not showing weakness. It would take time, but start gradually. That's good. Okay. Broken out. So you're working now again on that 1-2 step process. So you've broken out with step 1. Step 2, you need to hold above 4,372. Close above that with a kind of bullet handle or something to signal it. Ethereum, which would extend out. Daily. So, daily's kind of just had gaining positive momentum. It's been seeing it. Making these higher highs, going up, while the momentum has been steadily going down, right? So that's just a classic of the asset steam as it's going up. Doing that working. So it's not really a surprise to see start something off. I mean, it did it here. It did it. So comes back down, and that's the all-time high from May 12th. Okay, and if it doesn't, and it heads down here to 1035. Look, constant level lines up with it. That's a 38.2%. Very shallow, nothing big. Just from your low to your high. Down to that level, I mean, the area that I would be looking to live more there is at $4,000. But you might never get there. You might just act that level here. Will that support before? The conditions are this bullish. Class A bearish divergence, that kind of stuff. Unless you have like triple Class A bearish divergence, MACD and the RSI, and it's showing the week daily. Get your little retraces, your sell-offs. Everything is below. All the support will crawl at you. Right? That's it on the daily. I'm gonna take a look at 4-hour real quick. Again, you know, as long as you start to pivot above this low, get all the way down, all the way here, start to pivot, right? And you will technically, the momentum will definitely be part of the down sample line. Bullish up. Alright, so, all good.
Come on, man!
Go ahead. I'll find the music. I don't want to be playing the same stuff. Alright, cool. So yeah, Ethereum below this little local peak here, 46,000. That from the 3rd, months of support below 4,305 is probably where you're going. Kind of work. That's where we'll look. That's one on 4 hours showing starting to develop in bullish divergence. time to all good. I wanted to take a look here at Lincoln because it was looking really good and then kind of just started selling. And what was going on? This is the weekly had broken out of this. So it was looking good, right? It broke the neckline, it was up in there, got sold back down. On the day, just getting top type candle, just made a decision. But ultimately didn't close on the day above the neck, right? Like coin had going. So kind of rejected out of that zone. So we will see what happens with this, but you have this demand line down here, very solid daily candle. So you could see, like at this point, if Bitcoin continues to sell off a bit, get down here past that trend line before coming back up, or if it wants to decide to try and climb again, up in this zone is where I would expect to see pretty up. The reason being that at the 786 retrace next high back here, 9 ounce, high 21st, right? 786 retrace, and also at levels of, and at the pattern completions of errors regardless. So definitely can see resistance up here around $45. Really, this whole zone. But if Bitcoin wants to decide to keep off, you might get more pull back down and test this trend line before getting not guaranteed straight there. All you can do at this point is monitor levels of support beneath you. Ultimately, you have these back here. I would say at about $32.14. Support vector equals 21st. So we'll see. A little bit there. Hold on to that. But ultimately, this demand not really seen. Well, if it continues to sell off here, I mean, think of momentum being on a technically higher high. Let's say bearish divergence, right? It's not fully formed yet, but potentially. 4 hour, you had a higher high on the RSI here. No bearish divergence there. We'll see. All right, could get down into the support 3180. Falls below that, you're probably going to get some support around 30. Psychological number acting as support back here, 6. Right, acting as August 1st, 22nd. So that's where I would look. But if it breaks the trend line, I mean, there will be a little bit of technical damage. But yeah, $30, $24 here, back from March 24th. So watch. Okay. Again, remember the market follows Bitcoin. Bitcoin can start to rally back up. Doing something like this is nothing says buy right now. Nothing says I'm just wait. That's really what swing trading is on a nutshell. You have to wait for confirmation. It go like day by day. You gotta do it. You gotta wait. Looks like heading over the next couple. Gets down to those levels of support and then monitor. But plan for it. If it doesn't get there, then who cares, alright? If it doesn't get there, that means that it rallied back to the upside and just making some money, right?
Money.
If it does get there, and then start showing more signs of reversing your trigger, you're already prepared. Right? You want to be prepared before it gets there. If it gets there and you're not prepared, you're trying to figure out what's going on, then you could miss the opportunity. Yeah, man. So, if you guys want me to take a look at anything that you have been looking at or interested in, or whatever the case is, I know tech and it. Why, I don't know, I saw some stuff about, I didn't talk about shutting off pipelines or whatever. Whatever the case is, actually, but that's linked. On it, you want to break that neckline again, firm the break. Right, the week's not over, 4 days to get back up. If it does break it, firm, probably heading to this red zone up here, or catch us up. That would be a good prop take. All right. At that point, you want to wait for the confirmation. Okay. Cool little 22%. Okay. At that point, you would probably see it confirm, get up here, sell off, and then hold the neckline as support before continuing. But you want to firm break out that neckline first. Okay. So that is linked. Take a look here at. Take a look at that. One that we've been monitoring. I did take. I took some profits up here at 90 cents. Target. $90. $89 was out. They took some profit out of people. That's partially why it's on the day down 3.5%. But if we look at it, do a little analysis, it's a bit of a rising wedge. Probably a pattern. But again, I mean, you're coming off of your full-time graded supply lines, you've got your demand line down here. Daily not showing too much. Latest one did test this high back here from Bird. Held it, came back up. So let's see. Oh my god, dude, I haven't had the mic. It's one of those days, man. It's one of those days. I haven't had the mic in front of me this entire time, and I just now realized. Maybe I shouldn't, maybe Guinness was a bad idea. Wow, I'm sorry about that, guys. I don't know if you heard a damn word that I just said that entire time. And it's only been 30 minutes. That's cool. 30 minutes of potentially not hearing me, or you probably heard it, because let's be honest, I project it. But gonna sound super weird. No mic in front of me. Cool. All right. Hopefully that came through. If not, we'll just chalk it up, I guess, right? That's just one of the pitfalls of live streaming, I guess. When you make a mistake live, it's hard to take it back. Fix it. Whatever, dude. Okay. Anybody die? No? Okay. Cool. As I was saying, though, Avalanche here. You've got this rising wedge pattern going on. It's okay. All this support below you, this peak back here, September 23rd. You seemingly held it on the last candle close, so we'll see, right? Treat it as support once. Let's see if it can continue to treat it as support before continuing up. No bearish divergence, right? You've got higher highs on the oscillators. That's good. Yeah, I mean, you could be developing some hidden bullish divergence as long as you pivot above this low here from November 6th, all right? So if you can pivot, I mean, if you hold this level and can pivot here
and confirm this as support, also showing hidden bullish divergence, that'd be fantastic. That'd be great. And then you'd probably head back up here to test the all-time high again, $96.20. All right. And on, locally on the 4-hour, that level of support, right in between the 786 and the 618. Really, that came down and touched the 786 before coming back up. You've also got these peaks back here. Now, this is on the 4-hour, so I don't know how strong they really are, but we go ahead. I mean, the daily really would come down here. So 50% retrace at, what's this level? So this peak here from October 26th, that would be the 50% retrace. Could definitely see a level of support there. Also lining up directly with the supply line, this bottom trend line here. So that should be a strong level of support if it gets down there. All right. I can't believe I didn't have the mic in front of me that entire time. I wish one of you guys would have told me that. Sitting here talking to the dang wall. What else do we got? Oh, this is me right now.
Seems to be the officer problem.
That's me.
Oh my god.
What seems to be the officer problem? I have no idea. All right. Boy, all right, cool. So that's Avalanche. 50% retrace, lining up with a level of support at the demand line down here. So could definitely see some support there if it doesn't just hold here at $80. All right. The 4-hour was showing some Class A bearish divergence, but now it's just converged. It's just kind of selling off down here around 45 on the RSI. So it's no big deal. All good. Cool. Let's move it over to a stock here. I want to take a look at it because I know Pfizer had a good day. Pfizer, obviously, if you don't know who Pfizer is by now, you're probably living a pretty happy life, actually. Because that probably means you're not on social media or anything. Everybody's always talking about Pfizer and Moderna and the COVID and pandemic and all that stuff. But ultimately, they had a pretty good day today. 3.64%. Kind of a bullish engulfing candle. Positive momentum just building. Not quite overbought on the daily. But let's take a look. What I wanted to do with this is back on August 18th is when they made their all-time high. And it is an all-time high back from all time. And Pfizer's been around since the 60s. This chart goes back to 1963, I believe. It goes way back there, right? 68. So really since 68, I mean, it's just been in a gorgeous just uptrend. All right, it's just been very steady up. Yeah, from 99 to 2009, it kind of a selling off period, but really when you zoom all the way out from where it started, just continuously been in an uptrend. Okay, and that's what you need to do with this kind of stuff to determine what type of market you're in. Zoom way out, because if you're looking close and you're zoomed in, it could look like you're in a bear market, and you need to be careful with that because if you're actually in a bull market overall, bearish indicators, bearish patterns typically don't play out as well. So you might see a bearish harmonic and be thinking that, it could be the end, but you're in a very bullish trend, so it might not play out as strong as you think. Now, in the inverse of that, bullish patterns just play out stronger. So if you're seeing bullish stuff going on the weekly for Pfizer, considering it's in such a bullish uptrend, something to pay attention to. Could definitely mean it outperforms, but let's move it back to the daily here. So, because I remember looking at Pfizer when it was doing all this and it was selling off, and I was wondering, okay, maybe back here, $43, this peak back from December 9th might be a good spot. And then it continued selling off, and I was like, okay. So let's size up how you could find a good entry on this. All right, just Fibonacci it. When you've got something this kind of obvious, right, this much of a sell-off, and you're seeing it sell off. Just let's say it's August 25th and it's up here. All right, Fibonacci from the low to the high, and just remember, where are the common areas of reversal? All right, the 618. The 618 happened to line up pretty close with this peak back here, so it would make a lot of sense. And also this peak back here from October 8th, right? So it would make a lot of sense for it to pivot there or hold there as support. Okay, didn't happen this time, and that happens too, right? It's not going to hold every single time. If it held every single time at the 618 at support, I don't know if I'd be sitting here right now. I probably would, because this is, fun for me or whatever, but I probably wouldn't be where I currently am. I'd probably be doing this stream from Swiss Alps or something. But, so let's say, okay, the 618 failed. Cool, whatever. All right, you had your stop loss placed right below it, right down at like 42.62, and you got stopped out. Okay, so it's continuing to sell off. All right, so you just need to look to the next level. Look to the 786. We know that that's another deep value. That's deep value, right? That's getting way down there. And at the 786, do the Fibonacci. Look at where the 786 is, and then just throw a line there, right? Just throw a line on it and see where it lines up with. Is it lining up with peaks historically? Is it lining up with points of support or resistance? Yes. It lined up here March 5th, lined up here April 8th from 2019. Had a little bit of a local peak here, June 10th, 2021, and then you had a peak here May 5th of 2021. So just because it didn't work out on the 618, just take the stop, all right? Suck it up, put your pride aside, and then look at the 786 for signs of reversal, right? And this was just continuously kind of selling back up towards positive momentum, all right? And, from this low, as long as you made it, started pivoting above $40, really, you were going to develop some pretty serious hidden bullish divergence, right? And you did. You certainly did. All right, you did it on the RSI, and you did it on the MACD. And this is like obvious, right? Look at all this negative momentum. So when you're starting to see it sell back off to the upside, and then it's coming down, approaching 786 levels of historical support, that's where you buy it. That is exactly where you want to get in on the asset, especially something like Pfizer. Such a bullish uptrend. They got the vaccine. They're making money. They're reporting billions of dollars in profit. So the fundamentals are there. It just makes sense. All right. But that's what you want to look for, okay? After a sell-off like this, right? Major sell-off. So that's why you don't want to panic when stuff starts selling off. It doesn't mean it's the end of the world. It just means that now is the time to start preparing for it to get to the levels that make sense for it to reverse, and then plot them. And if it gets there and it's showing the signs of reversal, then you take the trade. Take the trade, put your stop loss in, risk 5% to gain 20, or 5% to make 15%, whatever the 3-to-1 odd is. And if it gets stopped out, then it gets stopped out. And that's just the nature of the game. Yo, dude, Danny, what's going on, dude? Welcome, as always.
My man.
Premium Discord member. I'm actually really happy you just joined because, one, nobody else talking to me. But two, the first 30 minutes of this stream, my mic was over here. And I'm sitting here just talking like this, just talking to nobody, talking to myself. And somebody probably would have told me that they couldn't hear me if they were talking, but nobody was. So the first 30 minutes of stream, my mic was out in outer space. So that might even be worthless at this point, but we'll just see. I'm just going to have 5 more Guinness and get hammered to forget.
Are you sure about that?
But I'm sorry, man, I cannot start over because then it would take me 3 hours to be done. And I don't know if I have that kind of time. I'll be on mic patrol. I appreciate that, dude. Thank you. For real. It wandered off on me, and dude, literally 30 minutes in, I noticed it all the way over there. I'm just like, dude. Well, actually, I looked in the camera, and it was just not in the frame. So yeah, I'll go back after you post the video and watch your take on Link. Yeah, dude. Yeah, absolutely. Yep. Yeah, we took a look at Link. You know, everything else, because Bitcoin is selling off a bit. Also tried to sell off. Link tried to break above. Remember, a lot of the assets showing that cup with handle on the weekly. It was above it, so it was looking like, you know, starting the fire and start licking your lips. And then it got rejected out like a fat loser. So want to break above it to get up into that red zone. I posted that in the Discord, right? It's at the pattern completion zone of the bearish Gartley. That's a good spot to take profits, but you've got this kind of ascending, broadening pattern, kind of a channel. Could come down and test the demand line here, this lower trend line, before continuing up. But we'll see, man. If Bitcoin keeps dumping, then everything else is gonna continue to dump as well. Doesn't matter how good the technicals look. All right, we covered Avalanche here a little bit. But really, what's going on? Stuff is selling off a little, just like it did back here September 23rd. Assets just do that. They can't go up forever. And when they start selling off, just look left for levels of support. Throw your Fibonacci's on it, all right, to see if they line up with the levels of support at areas that make sense. And when price gets down, if it gets down there, take the trade, put your stop in, and increase your probability of it playing out, right? That's what we're doing. We're just playing probabilities. So, cool, man. Yep, but yeah, we took a look at Pfizer, got down to the 786 at levels of historical support, failed the 618 at levels of historical support, and that will happen. And that's the other thing, too, and that's the mindset you need to have with this, is that I will never profess this to be a 100%, oh, it's going to pivot here, it's going to do this. It's just the odds are better at these levels. And if it fails, and it can, even the best looking specimen in the world with every ingredient that you could possibly put on a sandwich, even that, you have to put your stop loss in. Don't throw the house on it. You have to control yourself, because you never know when a news-driven catalyst comes down the pipeline and just destroys it, or it just doesn't play out, right? It could be an 85% chance of playing out, or a 95% chance. There's still 5% chance it fails, and you just don't want to throw half your portfolio away because you think that it's just perfect. Okay, because there is nothing that is perfect, and the best traders in the world, look up Thomas Bulkowski, talk to Steve Neeson, Scott Carney, all those guys. They'll all tell you, man, you have to use stop losses, and you have to be controlled in the amount of money that you put on any one given asset, because even the best looking things have like an 80% chance of success over hundreds of use case studies. So you'll study a pattern, like this is Bulkowski. He studies a pattern. He'll have 800 samples of it, and it'll be a very bullish pattern. And that very bullish pattern only plays out, 81% of the time. So 19% of the time it fails, okay? And it fails, so it can fail. And you always have to have that in mind when you go in to any trade, and have the plan for it, and know exactly how much you're risking before going in. Okay, so in this example, Pfizer, the 618 failed at levels of historical support. Oh, okay. Where are we looking next? The 786. So you get stopped out, goes down to the 786, you take the trade again. And if it fails there and goes down to the 886, you take the trade again, right? Showing hidden bullish divergence, all that kind of stuff. So that's just the way it is. If you put the mortgage on Link, I'm going to say this is not financial advice, right? This is just my opinion. It's just one guy's opinion. I would say I don't think that that's a good idea to put the mortgage on Chainlink. I don't know. If you have an actual financial advisor, maybe talk to him, see what he thinks about it. But my gut tells me it's not a great idea. But then, hey, that's when it doubles and you come back and, Dude, I told you, man, I was a genius. I guess people wouldn't really argue with you at that point, right? But then if it dumps and sells off and you lose your house, then can you look anybody in the eye and not feel like an idiot? So yeah, I guess that's a general rule in here. Don't put mortgages on stuff. Don't put mortgages on crypto. I'll put that as a I should put that as a banner or something up on the screen here for anybody that needs to hear it. All right, but yeah, man, Pfizer made sense to buy it down here. Now you can just kind of do it on the way back up, right? Where does it make sense to take profit? Really, there's nothing here. It went sky high because, all the vaccine stuff, a lot of news stuff going on, but went sky high. So this whole range from $43 to $50, there's really nothing here. So you're approaching resistance now, and you could do it exactly the same on the way up. So looking for the buy on the way down. Let's say you were looking to open a short position on Pfizer. I don't know if I would do that given the fundamental stuff. Yeah, dude. Don't bet the house. I'm sure at some point, for however long I do this, I'm gonna be like, oh, dude, bet the house. It'll be a joke, but don't ever do more than 10% of your overall portfolio. People are like, that's freaking boring, dude. How am I supposed to quadruple my wealth in a month if I'm only doing 10% of my overall portfolio? F that. I'm going to put the mortgage on the house, and then I'm going to blame him when I lose my house. But people are going to do that, That's just the nature of the game, all right? It's winners and losers, kind of a zero-sum game when it comes to trading and in the markets. I can guarantee you the market is not against you if you are struggling, not doing well. Just need to re-strategize, okay? And stop buying when things are going crazy. Start buying down at these levels when people are like, oh my god, why is Pfizer selling off, dude? What's going on? But yeah. So approaching the 786 I guess it's at historical. Even at historical resistance? Not really. I don't even know why I have that line there. Yeah, approaching the 786. Okay, common area to see maybe a reversal happen, but you're not showing any kind of bearish divergence at this level. Not on the 4-hour either, right? Not showing any exhaustion as far as buying is concerned. The weekly just started painting positive momentum again. And dude, you have hidden bullish divergence on the weekly for Pfizer. Okay. Not a joke. All right. And it just went positive. That 1618's looking really friendly with something like that. All right. Cool. How's it going, Danny? I know Rob and Nick can't make it in here. Anybody else that's in here, welcome. Go ahead, dude. Throw in something you want me to look at. Just say what's up.
Are you guys having a killer time?
And yeah, man, being a little interactive here. Cool. So yeah, Pfizer. Wanted to take a look at Pfizer real quick. Want to take a look at Cardano because had me a little bit nervous today. I don't like when it breaks a trend line and then just continuously gets rejected at levels of historical resistance. And that's exactly what it did, right? November 9th came up, touched $2.38 before selling down, and then had a bearish engulfing candle. Came back within the trend line here. You want to see it treat this trend line once it breaks out, comes back down, treat it as support. And it's seemingly doing that, right? On the day, the last one, it was down 7.62%, but then it came back and closed above the trend line. So that's good. Now you're just developing a new candle on the day, coming down, holding above the trend line. So you don't want to end up back in it. And really you want to stay above this point, this little swing from September 29th. hold that as support, and just come back up to try and break this zone, man. You're having a really hard time breaking $2.38. Look, you've tested it once here, October 7th, right? Came up in the zone over here, September 25th. So this just red box, which is really just resistance back here from May 16th, May 17th of 2021. Cardano's having a tough time. Okay. Not any bearish divergence. You did get just above that as far as the daily is concerned. If we move to the 4-hour, yeah, no bearish divergence on the 4 hours. So kind of just range bound between this red zone and this green zone. All right. The weekly, again, just showing that you touched it before coming back down, but no signs of exhaustion. No hidden bullish divergence either. But okay, it's okay for right now. It's still all right. Just hold above the trend line. And really, just hold above the green zone, okay? You come back down and test the green zone again. All right, we've seen it a million times. Could just do something like that. But yeah, do like to see there's no bearish divergence or anything on Cardano. Everything just kind of pulled back today. The sell-off. And again, with Bitcoin sells off, Cardano, even though it's prime and looking good, consolidating, looking like it's ready to finally break this zone, Bitcoin sells off, it's going to pull off and sell off as well. So nothing shocking here. But at the same time, if Bitcoin continues to sell off, you'll want to see Cardano keep that same energy and stay range bound, okay? If Bitcoin starts selling off and then starts breaking levels of historical support, okay, then that's when things could be getting a little bit squirrely. But seems to, no matter up, down, it's just been going sideways for a while. So looked like it was ready coming up here, but Bitcoin said nah.
Nope.
That's right, man. Exactly. As you should too. Just makes sense. Targets everybody else, and that's the thing, man. And you got to understand that these hedge funds or whoever has a lot of money is invested in this kind of stuff, if they have a lot of money in here, right? They're not going on Robinhood, looking at a number and throwing $5 million into something. If they have that kind of money, they have, if they don't know it themselves, they have people on the payroll who are better technical analysts than I am, for sure, looking at this stuff, but looking at very similar, same stuff that I'm looking at. So, you know, the price targets and stuff, oftentimes they play out and they work because they're kind of universally known levels in the world of technical analysis to be taking profits from. And then once the technical analyst starts taking those profits and the price starts to move, then even the people that don't do technical analysts just start to sell because they see the number going down. But I think really it kind of starts with the levels like the 786, the 886, all that kind of stuff, the Fibonacci stuff. Technical analysts are looking at that stuff, and the big players in this sell it off. News comes in, and just that also causes people to buy and sell things. But it's not a coincidence that you see levels like this get respected. So yeah, dude, kinda. I mean, really, it's like a self-fulfilling prophecy, right? And it really got popular back in like the 80s, and it's just been kind of gaining popularity. More people are doing TA now than they were doing way back then. So if we're all looking at the same kind of stuff and more people are joining and doing that same thing, you can see it happen more frequently, more commonly. It's, you know, if there's only one guy doing TA, then I don't think that the levels are really going to be respected the way that, you know, many people are doing technical analysis, all looking at the same kind of chart. And a lot of people interpret it different ways, but like the Fibonacci levels and stuff like that, there's no really, it's hard to interpret those in a different way if you're looking at like, as far as like swing trading, right? Because there are day traders, there are people that trade like on the 1 minute chart. that are just scalping every single little minute move. The bots, the quantum computers and stuff do it that way. They just take pennies all day long and just kind of stack it up throughout the day. That's not really what I do, and swing traders have a certain way, but it all plays into each other, right? The minute plays into the 5 minute, plays into the, what the hell's going on here? To the 10 minute, to the 30 minute, into the hour, to the 2 hour, to the 4 hour, to the daily, you know, et cetera, et cetera, et cetera. Yes, and that is why I'm here. Good, man. I'm good that you're interested in actually learning this stuff. And, you know, one of the main things about this is, you know, I'll put out my trade setups, and you can take them or not. But ultimately, the best thing that you can do is to really invest yourself into this information, because then, you know, I can't be looking at everything throughout the day. So if you can get on, and I'll actually show you one of my favorite screeners to use in order to find stocks. That is bright as god damn. FinViz. I'm gonna get it out of it now because it's very bright. But FinViz is a good place. You can go find gainers, all the news. Just search all kinds of different filters for stocks. That's for stocks exclusively. Crypto, I really just kind of go through like the top 100. I could show you that here, honestly, on Coinbase. I call it Coinbase, but really it's just like the top 100 coins. And I'll just literally just scan through it. I'll just space down through and just kind of at first glance see what looks interesting. And if something catches my eye, then I'll take a little bit of extra time on it. But ultimately, that's what I want you guys to be able to do, because if you can start doing that, then you start posting this stuff in the Discord as well. Then you'll show me things that I just don't look at because I don't have enough, you know, time. But yeah, link that in the Discord. Yeah, you know what? That's a good idea. But yeah, so it just building a community of like-minded people who want to trade, want to do technical analysis, that just constantly throw stuff in the Discord for everybody to look at. And, you know, in a few months, you'll be recommending stuff to me to look at, and I'll be like, yeah, dude, that's pretty damn good. And it just becomes just a community of people identifying different charts and things that potentially look good. So now, instead of one person looking at charts by themselves, I can only look at so many throughout a day. You know, people could be identifying things and posting them in there for me to look at. So that's kind of what I want to do. Learn more about it, but I start a new job and have a shitload to learn there first. If I can just sit here and be immersed, eventually I'll have time to... Yeah, dude. No, I absolutely understand that. I totally get that. And really what I would say, the biggest thing that helped me, I mean, obviously, is just kind of doing it. And if you think you have something, don't be afraid to be wrong. Just throw in Discord and be like, yo, is this hidden bullish divergence? Is this a harmonic, right? Does this make sense? And I'll just learn. Best way I learned was just through my mistakes, man. I would put something in a chat and they'd be like, nah, that's wrong. Your C point is off, or blah, blah, blah. And that's how I personally learn. But the books that I have in the educational resources on Discord, you could just kind of read some of the stuff that I posted, the harmonics on Discord, on the Discord, and learn that way too. But I get it, man. It's tough. Everybody's got their lives, and that's the other side of it. If you're very busy in your own stuff and you just want to come here for the trade setups or what I think looks good, that's totally fine too. But it's that old proverb, right? Teach a man how to fish and he will never go hungry, right? Give a man a fish, he'll eat for a day. Teach him how to fish, he'll eat forever. I guess that's the expression. But yeah, man. Moving over to VRA here. Also kind of selling off just like everything else, but what's interesting about VRA is that you've got this support back here from about 5.5 cents. This is back from April 10th, April 17th. Okay, regarded twice back there. Also a level of support here, more locally. And notice the negative momentum. All right, we looked at this in the last stream. And remember, we were like, oh, the negative momentum continues to build as long as it makes a higher low than here. And that level of support right here at 5.5 makes sense for it to act as support. Because I believe, if we're looking for some confluence here, locally, also lines up perfectly with the 886. Okay, so 886 Fibonacci retrace, historical levels of support, potential hidden bullish divergence signaling continuation to the upside. And really, if it gets that, the upside is back up to the prior all-time high. All right, so if you can, so that's what I mean. Look for it down here at 5.5 cents, because if you catch it down there, if it's showing signs of reversing, then you know you've got a nice little 57% potential swing there, and all you have to do is put your stop loss right below it. Put your stop loss like right here at like 5.5. Let's take a look at what that looks like, right? If we take it on the 886, which is right about here, just keep the stop tight. Keep it at like, just do like 4%. And then really there's nothing until you get back to the all-time high. There's no resistance looking left. Actually, let me not speak out of turn. What's this? Yeah, there's no resistance looking left there. This is kind of nothing. It's like the 50% retrace at local support here, but won't act as resistance on the way up. So look at this. You're risky. You would if you wait and you look for it to start to pivot to show the hidden bullish divergence, right? And it starts to show it, and it's actually doing it. You take the trade here. Your odds are 13.52 to 1, risking 4% to make 57% at the all-time high. All right, and that's where I would take my first profit. I'd probably sell a third of the position there, but that's it. That's really how I size this stuff up. God, I want to eat forever so bad. Yeah, that would be nice. Yeah, I had some weird stuff today. It was like a leftover day, so I had like shrimp lo mein and then a chicken rotisserie sandwich. And when Tay gets back, we're making some spicy chicken sausage pasta with a little bit of cheesy garlic naan bread. Dude, I don't know if you've had naan bread. N-A-A-M, I think. Dude. So good. It's good. It's good. It's good. But yeah, okay. So this is what I'm talking about. Prepare before it starts to happen, so that if it does start to happen, you boop, take it. And if it doesn't play out and it fails and you sell off, I mean, you could even put the stop below this local swing low back here from October 15th. All right, you're risking 8.92%. So if you've got $1,000 and you do 10% and you put $100 on it, right, you're risking $8.92 to make $57 essentially. All right, that's pretty good odds. I like those odds a lot. Okay, that's better than risking like $10 to win 20. All relative to your overall portfolio size, but you know, you got to start somewhere, and you have to be patient and just build it up slowly, right? Get rich quick, go broke fast. Faster, honestly. Your chances of going broke fast are better than your chances of getting rich quick. Big non-guy. Hell yeah. Shout out to India. I think that's where it's from. Is that insensitive to not know and then just say? Hey. If not, I'll give you credit for something you didn't do. But I'm pretty sure it was you. Pretty sure. Let's take a look at Newegg. Remember, last time we took a look, it was doing some crazy stuff, up 59% on the day after the falling wedge, levels of historical support, double Class A bullish divergence on the MACD, Class C bullish divergence on the RSI, right? And then it just went crazy at this level, and it was up 58% on the day, right? And where did we take profits? First profit taking level was up here at $18.90. So a very quick 48% scoop, and it has since sold off. down about 20%. Okay. So this is why it's important to also stick to your plan. All right. If you say this is your first target and you're going to take profit here, you put it there for a reason. All right. And the reason was looking left, resistance back from 2018, getting up to a point here, September 13th, 2021 of resistance. All right, and I just didn't want to get too greedy, all right? Resistance back here, August 28th of 2013, so multi-year levels of points of resistance. Yeah, I didn't want to get too greedy. I thought 58 was well enough. Doesn't even get up to the 2.36, right? So, yeah, took a quick little profit on that, and we'll see where it goes from here. As of right now, no bearish divergence or anything. Clearly very overbought, but you'll notice on the day, look at how low it got on the wick, right? Came all the way down to about 1361. 200-day moving average is right around there before coming all the way back up and closing above this local little swing down, this resistance from October 20th. Okay, so it's holding above that, so we'll see. You know, this could continue to go up, but after a pump like this, it's kind of hard to say. You can look at the 4-hour. Let's see. That's below. And look, it came up and touched the 200-day moving average like perfectly. Projected off that point as well. All right, so historical resistance, 200-day moving average up there. Made sense to make that an area to take profit. All right, just so you know, I'm not full of crap. This was identified November 3rd before it did its thing. And then popped off. All right, so November 3rd is when I took the trade down here. Took some profits, all right? God, I really need to, I gotta get my soundbite game together. I feel like I move stuff around all the time. Nice. It would really make the stream more smoother, if I could get that stuff to line up. But I get deep in talking and thought, and then I forget about it, and then I look down at it, and everything's all blurry, and yeah. But, yeah. You also got to get your name off there. Who's that? What are we talking about? Oh, yeah. That's a good idea. Yeah, that's a good idea, too. Not like dox myself or whatever. Yeah, I guess. Kind of don't care. I mean, what really could happen there, you know, kind of is what it is. I know people that do the streams and stuff that just use their full real name, and but yeah, I can see what you're saying. Just don't get swatted. Yeah, man. No, I hear what you're saying. That's a good point. It's a good point. Yeah, I'll do that. I'll switch it up. I'll switch that up next time. Just make it Obe TA. It'll also look a little more professional. Good advice, dude. Nice. But, yeah, man, that was pretty much it as far as what I just wanted to take a look at technically. I know there was some stuff going on today. They were talking, I know Fed came out with the inflation rate this morning. They were talking about highest levels in 30 years. Inflation has risen in the last year or so, or I guess a couple years, but yeah, it's a 30-year high. So back from like 1990, inflation is at its highest point it's ever been. And part of that is, you know, what's going on with the supply chain crisis, and you know, that's causing prices to rise as well. But Powell came out and said that he doesn't expect stuff to get better until like the second or third quarter of 2022. So in fact, he said things are probably going to get worse before they get better. So as far as energy is concerned, gas, food, rent, all that kind of stuff, it's probably just going to continue to go up in the short term. And if Bitcoin truly is a hedge to inflation, then you would expect Bitcoin to perform positively with all that going on. So, I mean, we'll see, right? Higher prices suck. Of course they do, but I guess just kind of get used to it, right? Probably only going to get worse until it gets better. And the Fed, you know, who the hell knows? The Fed says stuff all the time, and are just not correct. In fact, I think they're incorrect more than they are correct. So take what he's saying with a grain of salt. Personally, I feel like it probably is going to be not better by then, just given everything that's going on with, all the money printing and just everything, just kind of in general. I don't know. Market's just been pumped up so high for so long in the midst of all of this stuff going on. It just doesn't go down. So I think we're just due for a correction in general, like a strong one. So all this inflation stuff coming in now too, it's, I don't know, recipe for disaster in my opinion. Yeah, exactly. You always only hear part of the story. All right, they always come in. It's contained. It's contained. They said the same thing back in 2007, right before the housing crisis, right? We will contain mortgage losses at 3%, and we are very aware, blah, blah, blah. And then, it dumps and everybody gets screwed, and it was unprecedented. We didn't know. It was, bankers, the Wall Street is their fault. They knew. All right, can we be real here? These guys know more than anybody about this kind of stuff. You're telling me that people figured it out, just random people figured this stuff out, but the head of the Fed didn't know? Head of the credit bureaus didn't know? I mean, sounds like a load of crap to me. Okay! But yeah. So let me check my notes here. And as I was saying in the beginning here, man, up until before the streams each day, I'll do my analysis throughout the day, get familiar with stuff, and just kind of write down what I want to talk about. In case nobody throws any stuff my way. But everything started selling off at like 4 or 5 o'clock. So I had everything set up to be like, oh, it's a positive day, like all-time highs, blah, blah, blah. And everything started selling off. So, and that's actually a good point that I didn't make on Bitcoin. On the day, right, we had the breakout, and we had the 1, 2, 3 step going on to confirm a strong breakout. So, right, we broke out on day 1, step 1. Step 2, we held this prior all-time high. All right, we closed at it, which counts. It's good. The next day, we had it like all day long. We had a bullish engulfing candle. I was like, dude, it's good. If it closes here, 1, 2, 3 step, close, breakout strong, going to higher prices, let's go. And then, dude, they just said nope. And it's like they know that, right? It's almost like they know it needs a bullish engulfing candle to continue the buying, and then they're just like they just come out. Nope. And then it just sells off, right? And that just happens, man. It just happens, which is why it's very important also to wait for confirmation of the candle, right? Don't take the trade when there's 3 hours left until it closes, like expecting that it's going to close there, all right? And that was a good lesson to me because I had my thumbnail all drawn up and everything, and then it came down below and just wiped that whole argument out. So I had to create a whole new thumbnail, stuff, whatever. But you need to be reminded sometimes, and I know that, but you have to wait for actual confirmation to confirm and to close. So don't think about this candle until 22 hours and 46 minutes, all right? Wherever that close, we'll take a look at it then. And same thing for the 4 hour, right? If you want a shorter time frame, 2 hours, 45 minutes, move it to the hour, 45 minutes till an hourly close. So these can, again, always bleed into the time frames ahead of them. The hour can give you an idea of where the 4 hour is going to shake out. 4 hour can give you an idea of where the daily is going to shake out. You could do a 3-day, right? So just do a 3D. 3-day will give you an idea, maybe a better idea of where the weekly will shake out. So 22 hours, 45 minutes for the 3-day to confirm. That would be some dark cloud cover. But holding, if it closed right now, it would hold this all-time high back here from April 13th. It's not all-time high, but this peak from April 13th, which is nice to say because it was the all-time high that we were trying to break for so long. And now we're treating it as support, baby.
I trust everything's going swimmingly.
So, can't be mad. All right. But, yeah, man. It's been about an hour, 15 minutes. Unless you've got anything you want me to take a look at, that's pretty much everything that I had to talk about today. And let me just make sure. Yeah, energy and tech got crushed, inflation doing its thing. That's pretty much it. Yep.
That's not good enough.
All right. So I'm gonna go grab another Guinness. I think I still need to. Yeah, of course, dude. Of course. I mean, again, man, it's like fun for me, right? Like if nobody ever came, like I just enjoy doing this kind of stuff, and ideally this is what I would do as like a career. But I don't know of many companies that want to hire a guy to go live and analyze stocks and crypto. You know anybody, let me know. But yeah, man, it's just fun. It's just a good time. And, you know, it's cool to have almost kind of like a hobby that also just happens to make you money. But that's kind of how I look at this stuff. It's almost like a collection, right? These are my stamps. These are my baseball cards, my Pokemans. All right. So get that mindset. Buy things that make money. All right. That's how people get wealthy. That's how people get rich, right? They don't buy depreciating assets like cars, blah, blah. Not financial advice. This is just what I hear in the investosphere. But you buy things that appreciate, that grow, that make money while you sleep and all that, right? You've heard it a million times. Play it out. I'm not gonna do that kind of stuff, but yeah, it's nice to learn this stuff, and it's in a way almost kind of like gambling, sorta. You get that kind of high when it does play out, because again, it's always probabilities, but it plays out and it hits. It's like, you know, hitting a bet, hitting the odds, right? You get that little dopamine rush. So it keeps it exciting, keeps it fun. But yeah, man, good to know. If you're going to be investing your money and stuff, your hard-earned money that you work for every day, unless you love your job, I know most people do not, don't waste your time that you put into doing something by just willy-nilly throwing your money at random crap that you don't know what's going on with it. All you see is a price on the screen. All right, this gives you a little bit more security. Helps you feel a little better about spending your hard-earned money. All right, gold chains for the Obe crew, dude. That's right. When I get to 10,000 subscribers, we will have gold chains engraved for the OG. I guess it's what, 5 at this point. The OG 5. All right. I mean, I'll eventually probably make you guys like moderator or something, but neither here nor there. All right, we'll cross that bridge when we get there. But yeah, man, as always, appreciate you being here, interacting, chatting with me, making it interesting. You know, don't need to tell you, but just for anybody else that comes across this video, go ahead, hit the like button, hit the subscribe button, throw a comment down in the comment section, even if it's nothing. Anything to try and help this, help YouTube pick up the channel with the algorithm, whatever the case is. And join the Discord, man. All that stuff down at the bottom. I think I'm pointing the right way. Yeah, over there. Join the Instagram, the Twitter, the Discord, yada, yada, yada. In the Discord 24/7, do an analysis, throw me whatever you want me to look at, and build this thing from the ground up, baby. All right.
Okay! What, you're selling fruit bowls or something?
Cool. All right, guys. I'm going to get out of here. Have a good night. I will be back on Friday. And as always, man. All right, peace, brother. Keep it technical. All right, please.
Come on, man.
Nice! Nice!
Wow, what a great audience.
My man!
Okay!
Okay.
I trust everything's going swimmingly.
What am I gonna do?